How to exponentially grow your real estate portfolio without putting any of your money down. That's the topic for today's episode, and without further ado, let's dive in. Hello everybody, and welcome back again to another episode. For those who are tuning in for the first time, this is your channel for real estate education. So today we're going to talk about how you can exponentially grow your real estate portfolio using notes. For those who have never heard about notes before, I'm going to go ahead and walk you through the definition, but rather than give you a definition itself, I'm going to draw a little nice diagram here so you can actually get an idea of what the entire process of note investing is like. And just to make sure, before you even attempt to make this, make sure you consult with a real estate attorney, with a title agency, just to make sure that this exercise is actually legal in the state that you're about to do this. And I'm pretty sure it's legal, but always double check just in case, because they have different terminologies. Each state calls it differently. So just simply explain the practice itself to the real estate attorney, and they will be able to take care of you and make sure to draft a contract that's going to have you legally protected, and also make sure that you can still collect the money of what you're about to do just right now. So let's assume that you found a house and you really want to invest in it, and you go through the traditional routes of going to a bank, right? So this is you, and then you go to the bank and you get your loan approved for $100,000. You go on about your life, you're very happy, you bought your house, you're renting it out, great. But what happens if 3 more people were to come in the picture? So you got investor A, B, C, who will also like to get access to money. But this bank gave the last $100,000 to you, the investor. And now these 3 investors are not going to get access to any funding because they have to wait for you to pay back that loan every month for the next 30 years. So what banks do is that they go ahead and they sell the mortgage note to investors. So now a very prominent one is Fannie Mae. I'm sure you've heard a lot about them in the news. They were all over the place because they had to be bailed out by the Federal Reserve Bank. That's a topic for another episode, but this is basically what they do. Fannie Mae doesn't own any mortgages. So what they do, they come here and they buy the notes from the banks, and in exchange, they provide cash, meaning liquidity, into the banks so that they can have money and lend to other people. So let's say, for example, the bank comes in and sells your mortgage for $100,000 to these investors at a discount, and they sell it to them at $75,000. After, let's say, a month or 2, maybe even 6 months after they issue you the loan, they sell it at $75,000. Now, you'll probably be wondering, well, that sounds kind of stupid. Why would I ever want to sell my note at such a big discount? Well, you have to think of it this way. One, they already charge you a ton of money in mortgage originations. They already charge you a couple of months worth of interest rates for the mortgage that they issue you. So they already made enough money, more than you think they made. And what they're doing is they want cash today. They don't want to have to chase you for the next 30 years. They don't want to have to wait for every month just so you can give them something, because a mortgage repay of, like, let's say $1,000 is not enough to make all of these 3 people happy. So instead, they sell bulks of mortgages to organizations like Fannie Mae, who come in and they provide liquidity to these people. So assuming we're only talking about that $100,000 loan that you got, they sell it for $75,000. Now that means that they get to borrow $25,000 for each of these people, and everybody is happy. Everyone is a happy camper. Everybody gets to go and invest in their own real estate portfolio, buy more, and continue growing. So what happens to the mortgage payments now is that instead of you and all of these 3 people having to pay the bank, what you're going to do, you're going to start sending your money to these people right here, the Fannie Mae people, or whoever investor comes in and buys those mortgages. This is not only done in real estate. They also do this with medical bills. They also do it with your student loans. I'm sure that, for some of you who has had to go into the emergency room, and then all of a sudden you get a bill for $2,000 from the hospital, and then 3 months down the road, you receive another invoice saying, hey, don't pay the hospital anymore. Now you're going to send your payment to this person right here, or this company right here. Or for those who have already bought a couple of houses or their first home, and you get your mortgage bills for the first 6 months from the bank that actually issue you the loan, and then all of a sudden 6 months down the road you get another letter saying, you know what, don't pay this company, go ahead and pay the other ones. And so in essence, this is what note investing is. And if you want to get more creative, then these people, they come in here and they sell the loans again to other investors who are willing to basically buy this at a discount and give Fannie Mae money so that Fannie Mae can give banks any money. So you have other investors, investor 1, 2, 3, 4, they all get a piece of the cake. And basically what they do, this is an ongoing process that goes back and forth and back and forth. And the reason why the crisis happened, for those who are, wondering, okay, well, I hear Fannie Mae, this is not good news, what's going on here? What happened is banks started lending money to people who were not supposed to be qualifying. Let's say, for example, you have a family coming into the bank and asking for a loan. All they can afford was $1,000. But the banks, what they did is that they started underwriting all of these loans for a minimum payment, let's say, of $1,200. And how do you expect a family to pay an additional $1,200 out of their pocket? So what happened is these families here, they started defaulting on their payments because they just simply could not come up with the money. They didn't know. They thought they were buying a house that they could afford because the banks told them that they could, and then eventually they could not. Or maybe there was a job loss, but everything happens at the same time. And so what happens is Fannie Mae went ahead and sold the loan to all of these people, and then whoever was on this side of the picture was not getting any money from all of these 4 people right here into their bank accounts, and that means they can no longer afford to buy the loans from Fannie Mae. And because Fannie Mae didn't have enough money from these investors right here, Fannie Mae cannot afford to buy anything from this bank right here who issued you the loan from the first place. So it's a whole ripple effect, okay? Now, you might wonder, what does this have to do with me? It has a lot to do with you, and this is where the fun part starts. I just wanted to get you the overall concept of what note investing is, and now we're going to dive into the creative part and how you can actually expand. So first things first, what do you think you can find all of these note investors, right? You can find them in local RIAs, you can find them in for sale by owner signs, or you will probably see some of those in Zillow saying, make me move kind of signs. So these are all engagements that you can deal with the seller directly. And this is how you're actually going to structure the deal so that it works out to your advantage and you don't have to put any money down on that purchase. So let's say you come in and you see this house. You met this person at a local RIA and he or she is saying, okay, I have this house for $100,000. Are you interested in buying? You go, you check it out and you love it. And the asking price is $100,000. But what's the problem? You don't have $20,000 to put down. And you already have an FHA loan that you've used to buy another rental. So even if you have the $5,000, you can afford to put $25,000 down. So what you're going to do is that you're going to talk to the owner or the seller in this case, and you're going to ask them, hey, are you willing to finance the down payment? Meaning, I can go to the bank and ask for $80,000 and finance it, right? And basically, you're asking them to put the $20,000 in your behalf. So they can go ahead and put this down on your behalf. And what you're going to do, you're going to create a promissory note saying, okay, now for the next 5 years, I'm going to pay you monthly payments or whatever is the arrangement that you guys have. You can pay the monthly payments for the next 30 years, or you can do monthly payments for the next 5 years, and then give them a balloon payment at the end of the term. For those who don't know what a balloon payment is, it's basically a structure where you start paying small monthly fees, usually interest only, to the owner until you paid off the loan. And then in the last month, you just paid out whatever balance you have left. So you come in here and the owner is paying $20,000 down, and then you go to the bank and you finance the remaining $80,000, and voila, that's how you got the house. And guess what this owner is going to do? He'll probably going to charge you for the first 6 months, 12 months, and this person has collected enough interest off of you, and guess what are they going to do? They're going to go to another local RIA. So from this $20,000 that they lent you, let's say you pay down $3,000, so that means this promissory note still has $17,000 left. So what they're gonna do, they're gonna take this $17,000 and they're gonna sell the note to another investor. So that way they can get cash today, usually at a discount. So let's say from this $17,000, this seller decides to sell the note for $15,000. They sell it for $15,000. They will prevent themselves from having to go after you ever again or deal with you ever again, so you can pay them back the monthly payments. You're gonna go ahead and start sending those payments to this new investor that purchased the note for $15,000, and the seller gets his or her cash today. They can get those $15,000, go on a trip, buy another property. It's all about what you can get with the money today. And that overall is the concept of note investing. You can do this the same way for your own investing. Let's say you have a house and you want to sell it, and they can come to you and they say, you know what? I would love to buy this house from you, but I don't have the $20,000 to use as a down payment. Can you do a seller finance? Can you help me with the down payment? And you do exactly the same thing. You come in, and then now instead of the buyer, this is going to be you, right? You put down the $20,000 for this person. He or she is going to go to the bank and get the finance for the remaining $80,000. And then every month you're going to receive cash flow. You're going to receive whatever payment you two agreed on, whether it's $500, $1,000, until this loan is paid off. If you want to keep the note with you because all you want is just a monthly cash flow, or you can take the same approach and just sell this promissory note to someone else at a discount. Let's say you collect the same thing, $3,000 already worth of note payments, and you sell it at a discount for $15,000 here. And you don't have to deal with this buyer ever again. You got $15,000 in your pocket, and then you just move on and do whatever you want with that money, whether it's a nice family trip or whether it's another purchase in another neighborhood that you were planning to move into anyways. The opportunities are endless. It's all about how creative you can get with it. And that's it. That's all about note investing, how it can actually work for you, how it can actually work for the banks or the buyers or the sellers. It's a win-win for everybody. Just remember, real estate, it's all about making money in the buy, using other people's money, and how to create a win-win situation for everybody. So that's all I have for today. And if you guys like the content that I shared with you today, feel free to share the love and spread the knowledge to other people by sharing this video. And as usual, don't forget to hit the like or subscribe button. For those who are actually interested in coaching or mentorship with me, please visit the website at www.novariseinvest.com and just enter your email, and someone in my team will go ahead and get in touch with you to see how we can work together. And that's all I have for today. And without further ado, I'll see you guys next time. Take care. Bye-bye.